I want to get to gold and I want to get to 10-year as well. You got to keep an eye on these markets right now. Just coming out of rollover in treasuries as well. It's interesting. I mean, look at the 10-year. It's coming down right now. It's
It's confusing, right?
Such an interesting rate environment right now that, I mean, expect rates to be back in focus again. We go back to where we were prior to this. It was about tech earnings. It was about playing catch up to earnings, and the indexes were being driven higher because stocks were beating earnings. Projected earnings going forward were higher and higher. Look at the NVIDIA. They just kept beating no matter how far up there they pushed them. And, that environment now I think is changed, right? Mm-hmm. And what the Fed was doing, what it mattered, but it was not the focus. Will it start to be the focus now? Kind of thinking that's the case. And so you got to watch what happens in the 10-year. And you heard Blue in the previous segment. 10 years a market you got to keep up. And there's going to be nuance to this where if the 10-year starts coming down quickly, what is that going to do to the indexes? They've been in this trend or higher for a while now. But, at any time, remember, if bonds are going up, rates are going down. If bonds or treasuries are going down, rates are going up. And so, the 10 years obviously priced in rate cuts coming into this. And is it a buy the rumor, sell the news type scenario? But ultimately, what does it mean for the market if the market starts seeing that, even though the Fed's just projected out a lot of cuts? I mean, it's one of those things where I don't have a real comment on what it's doing right now from here. But I will tell you this, keep one eye on rates and keep one eye on gold, because gold should continue to flourish here. If you remember, Tom, you and I, maybe a few shows back, I said, gold is the market that looks like it's going to continue to be strong. It's funny, when I sold most of my portfolio in September, the only thing I really didn't sell, I kept some tech, very little, and I kept my gold position. Just because I looked at it and I said, if something happens, I don't think gold's going to do much of anything here. It's a slow riser right now. Not typically what I've seen in gold in the past. I will tell you this, that in all the years I've traded gold, I will tell you I've probably struggled in this market more than most, because this market, with fake breakouts, pulls back in, ends up being a range-bound market, and it just is like, now it's this creeper rally where it's like it just continues to chip away at highs. That means that there's underlying bid. That means that on weakness, if you keep it up and you look at it from a wider perspective and you get pullbacks in gold, I like gold on the buy side, because it's just that slow grinder higher. And it reminds me a lot of what you would see in an S&P in a slow bull market, where it looks like this, where it's like ripper higher, sideways, minimal pullback, rarely sideways, maybe a new high comes back in, creates some balance, grinds higher. I like gold to that one directional move as well. I look for pullbacks in that.